Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Fisker Automotive, ticker symbol FSR, after a brutal week, closing the week on Friday, February 23rd at a price of 59 cents, going down over the course of the week just over 19% down and actually hitting a new all-time low of 52 cents. So really not looking too good there, but it is quite possible we have found a bottom and it's only upside from here. So, that is what I am hoping, but also good to prepare for the worst. So, I'm just going to go over in this video the daily candles and go over some drawings and retracements that I've done. Some I have covered in previous videos, but some are new. Most of them actually are new because, we hit all-time lows. And so here, still trading in this channel, so that hasn't changed. We did break below this key level of 74.67 cents and also broke below the previous all-time lows of 72.55 cents. And, as you can see, this happened over the course of the short trading week beginning on Tuesday. February 20th, we got a almost 14% drop on the day, actually gapping down and then gapping down following that day. So potentially good that we do have some gaps to fill to the upside. But, we did continue down over the course of the week. However, on Friday, we did go up nearly 10%, reclaiming some of those losses. So I do think that is good. With this, I do want to point out that in previous videos, I had gone over this Fibonacci retracement here, this yellow one, that does include the 1618 extension to a price of 59.11 cents. And so I did suggest that price could be going down to that level. I didn't expect it to happen this fast, and I do think it's pretty interesting that it did hit that level and we closed just below it on Friday. Hopefully that's not a terrible sign that we're just below it, especially with earnings coming up. I do think that it's actually pretty good that we are at these lows before earnings. Expectations are going to be super low. And with that, any little bit of good news or not bad news could really trigger the stock to rally and potentially get back to $1 a share. So I do think there's a lot of great potential coming up before earnings, which I should note are going to be reported in the after hours on Thursday, February 29th. Wish I could cover it, but unfortunately I have to be at work. But I do think that's going to be pretty good for the stock, and I do think that we will see a rally following earnings. And with that being said, some levels to the upside that we might want to be paying attention to. One, as I had mentioned, is 59.11 cents. Hopefully we can get a close above that. We did get a wick above it on Friday, hitting a high of 61 cents, but we could not close above that level. So I do think that's going to be a key one to reclaim. Also, we don't want to be putting in new all-time lows. 52 cents a share is low enough for me. I don't want to see it any lower than that. But if we do think about, the closes that we've seen here, the lowest close that we've seen was at a price of 53.76 cents. So ideally, we don't see any closes below that one. I think that's going to be pretty key to hold. It was nice, that we got some discounted shares below that price, but it's tough to say whether or not we're going to continue down or, if we have found a bottom. We unfortunately did not put in a bullish engulfing candle on Friday, even though it is pretty bullish that we did get almost 10% up on the day. So some other levels to the upside, this first initial gap here that still needs to be filled is based on the low and approximately the close on February 20th, so that was Monday. And so that gap is at a price of 63 cents or 63.01 cents. So hopefully price will be getting back to that soon, filling that gap. I suspect it will, but it might get rejected there, before pulling back a little bit, maybe finding support at 59.11 before continuing higher to fill the next gap, which let's see here, the low on February 16th, so that was last Friday, was 73.12 cents, which was the exact same price as the closing price. So getting up to 73 cents, 73.12, that will be key to fill that. I do suspect, because we've had all of this consolidation over here, we've had a lot of volume traded there. There will likely be resistance there. People who bought up here expecting discounted prices before going up to $1, they might be offloading shares there. So I do think that we will see some resistance there. But if getting to that level coincides with earnings, with an earnings beat, and volatility moving violently to the upside, I do think that we could be blowing past that level and potentially moving to $1 a share, if not returning to this high of 94.3 cents. I do think that will be a key level to get 2 consecutive closes above, so do keep that in mind. But then let's see other levels that stand out here. The 236 from this retracement down is at a price of 61.98 cents, and then the 382 is at 68.16 cents. So those are levels that, we might be potentially finding support at as we do start to move our way up. I do think that we are going to be moving our way up from 52 cents. But, of course, I could be wrong, as, I was expecting there to be a rally following last Friday. I thought that I was looking at bullish divergence, but, that wasn't the case, and it did break down. And I should note that I had mentioned that buying the dips around 75, 74, 73 cents, that's something that I was considering doing into this week. And when price hit 73 cents so quickly, I decided I'm going to wait to place an order. I'll instead place one at 59 cents, right around this Fibonacci extension. That was filled, but then following that, I've been a little bit reluctant, not wanting to buy a falling knife. But I do think that, with us seeing this little tail coming down from that candle, big green day, and earnings coming up, I do think that the bottom could be in. So while, I don't have orders placed just yet, but I am considering placing one down here just because I think it's cheap, and I do think that we will see a rally following earnings, but I also do want to be prepared for a continuation down. If that does happen, I hope not. But, realistically, we are still, in the middle of this channel that I have shaded here. And so we could be returning to the bottom side of that, which could be, going to around a price of 46, 47 cents. Hopefully that's not the case. Hopefully we get back to $1 soon. But yeah, I just wanted to throw that out there. And also, I do want to throw out there as well, I had mentioned bullish divergence on Friday of last week. While we were putting in lower lows here, we hadn't put in the low for the RSI. Whereas here we have, because we had that green day, we saw that green day on Friday, the 23rd, we saw an uptick in the RSI. And so, I can just draw the trend line here. That does show that we have formed higher lows in the RSI, whereas we have very clearly put in lower lows in the stock price. I do think that this almost 10% rally that we saw on Friday of last week, I do think that this bullish divergence that we're seeing, I do think that we could see a rally in the stock price next week, whether that's leading up to or following earnings. I do think that the stock price is beaten down so much that 52 cents really is a bargain. So, I'm keeping my chin up. I'm excited about earnings. I think that things are going to be looking good for the company in the next quarter. And I think that this is a great discount. But, of course, it could go lower. So do prepare for that. Be prepared to buy a dip within a dip, as always. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.